Hello traders and welcome to another video review. Today is Monday, September 16th, 2024. Let's find out what do we have in the economic calendar for the Monday, the beginning of the new trading week. PPI data from Switzerland beats the expectations of 0.1% with the actual number of 0.2%, which is better than the previous number of 0%. We are still waiting for the Italian CPI and the budget balance from Turkey. ECB, the Guindos, we give a speech 10 minutes past 10. At 11 o'clock, we got the trade balance and wages in the Eurozone data. New loans in China are scheduled for release at 1 o'clock, and then we got another speech from ECB Lane, and at 2:30 we got the New York Empire State Manufacturing Index. Manufacturing sales from Canada are scheduled for release as well at 2:30, and that's about everything. If we consider the important data releases for today. Last week we got the ECB interest rate decision. We got the we're still waiting for the Fed, which is scheduled on Wednesday, September 18th, 2024. So this will be the major event of the week and of the month. Which is why, for now, let's just switch to the technical part of this review and take a look at the majors. I think we will start with euro dollar. For our chart of the euro dollar, is showing us a strength of the bullish camp that is testing the trend line again after the ABC corrective pattern towards 1.1005 had been completed, and we labeled this movement to the downside as the wave 4, possible wave 4 bottom. We got the very nice bounce as the wave, another wave, impulsive wave, is in progress. So it looks like the market broke above the 61% of the Fibonacci retracement of the last swing down, which is in our situation wave C. 1.1096 was that level. Now we are way above this level. Local high 1.1116. So this Fibonacci measurement is no longer needed, which is why it's out of this chart now. We are testing this trend line here, and that might be quite interesting to see what is going on here, because in a case of a breakout higher, the next target is 1.1150 to 1.1155. So this is the virtual high of the wave B, and then of course we can even extend towards the last major swing high at 1.1202. If there is a failure of a bullish camp to extend higher, then of course we will reverse, and possibly this wave might be then labeled as a part of the wave 4. So that will be wave D, A, B, C, D. So we want wave E to the downside for the triangle to be made, and then of course we can continue in wave 5 to the upside. However, if we take a look at this progression here, you can see that this is 1, 2, 3, 4, 5 waves to the upside. It looks very impulsive. So the chances here are a little bit lower for the bears that they will be able to push it lower back towards 1.1073 and towards 1.1051 whatsoever. All right, so please stay focused on this market, stay vigilant, because we are about to make a decision whether the euro dollar wants to go up or down. Very interesting place here. Now let's go to the US dollar and Japanese yen. And the US dollar and the Japanese yen, look at this. We keep going lower, and we broke below this very interesting technical support. This is the low from the 28th of December 2023 that had been broken just a minute ago, and the new low is 139.70, despite the fact that we have here the bullish divergence on a daily time frame chart. So very important technical support had been violated. We are seeing the levels lowest in 1 year, at least in 1 year. well, almost 1 year, because it's September. This is the December, so basically the lowest in the year for sure, lowest of the 2024. And that's it. Looks like the market wants to stop. If we switch to the lower time frame, like a 4 hour, we can see straight on that the market is below 50 and 100 periods moving average, keeps moving lower, keeps moving towards the next target. It's not that easy to find the next target here, because the US dollar to the Japanese yen is still in the major uptrend. However, please stay vigilant, because we might have the downturn on this market happening right now. Now, cable market, as you can see, retraced 38-ish percent of the last swing down. We got the local low at 1.30 basically, so this technical this Fibonacci levels are no longer necessary on this chart, and since this low was made, market progressed to the upside, targeting right now this local high 1.3235. The level of 1.3109 will now act as the technical support. And as you can see, the overall structure is again corrective. We got the wave A, possible wave B, possible wave C to the downside, terminated at 1.30, and then nice movement to the upside with very strong, very nice momentum as well. So if we add some kind of a trend line, just as we did in case of euro dollar, what we can do here is basically apply it like that. So you can see there is still some room to the upside here towards the trend line. There is still some room to the upside here towards the extremely overbought conditions on the 4-hour chart. Yes, this is a 4-hour chart, of course. So it's possible that the British pound will actually test this trend line before making decision whether it will attack the swing high 1.3265 or reverse a little bit lower. So please keep an eye on the British pound. It looks rather bullish right now. Strong momentum increase from the lows of 35 points and the lows after the wave C was completed. ABC to the downside done. I'm just wondering whether there's any kind of a relationship, just for the educational purposes only. Let's find out if there's any relationship in these waves. Maybe there will be some. So we make the measure of the wave A from the top of the wave B. Unfortunately, there is not, because the one is here, 161 is here. So basically there is no measurement here, but it looks like 38% of the Fibonacci retracement was that target that the market was after. Now when we can do this, we have this kind of a megaphone structure here, which is again bullish. So that might evolve into the expanding triangle pattern, which is even more bullish. So please stay focused, watching the cable as well. Last but not least, as usual, we are going to take a look at the Bitcoin. The Bitcoin is, as you can see, going lower, and the reason for that is that we finished 5 waves to the upside as expected, and we got the new local and the swing high. So let me just place this swing high roughly around here, 60,618. So that's a very nice movement to the upside. Now it will act as the technical resistance, and now we are testing the potential technical support. 57,981 now will act as the technical support, and the other level, which is 58,546, will act as the technical support as well. Momentum went down from the extremely overbought conditions on a 4-hour chart, down below the level of 50. Right now the bulls are trying to terminate this movement to the downside and regain the momentum to increase even higher, to move towards the next target after the correction is done. And we can see that this is the correction because it's the biggest movement to the downside wave since wave 4, basically. Yes, since wave 4. So this is the possible wave 2, and the next target would be this high here, which is 61,185, and then the technical resistance roughly around 62,833, and eventually swing high at 65,084 dollars. So if this is the low for the wave 2, possibly for the ABC corrective pattern, we should see another movement to the upside on the Bitcoin market, targeting the next technical resistance levels. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.